have a look at the following. So this is now Ethereum relative to Bitcoin. And what's interesting is that since the merge, so since it moved from proof of work to proof of stake, since all the miners, they exited the Ethereum ecosystem, the system itself tended to grow much slower. And because of that, because we didn't have this new influx of new people, and this I think was one of the reasons why the ecosystem grew so much in the first place, we tended to underperform Bitcoin and the market in general. This here is Ethereum relative to Bitcoin. This marker here, that's the move from proof of work to proof of stake. Many people were very much anticipating that technological change. It also improved the tokenomics of Ethereum. But since then, Ethereum was just getting sold off, mainly by the OGs, mainly by the people that invested in Ethereum very early on. Now, we did have a rally, right? We did have a bounce that started in April of last year, where Ethereum outperformed Bitcoin by almost 150%. And we all know the story around this, right? We all know why we saw that outperformance. That was because of Tom Lee of BitMine buying. So everybody now thought, okay, we will have Ethereum treasury companies, very similar to how we have Bitcoin treasury companies. So more and more public companies, long-term accumulating Ethereum, helping the price. But that only lasted so long. That only lasted until September of 2025. That was because the purchases outside of Tom Lee's BitMine, they slowed down. So no other company bought Ethereum anymore post September 2025. So that was the first thing. The second thing is that BitMine only has the intention to ever own a maximum of 5% of Ethereum supply. And so even the purchases of BitMine themselves, they are coming down. And because of that negative outlook, since September, Ethereum is underperforming Bitcoin again. If there's no strong narrative around Ethereum, it tends to do bad. It only tends to do good if there's some massive development happening. Otherwise, it goes down. And so it's going down ever since. It has already sold off a lot. We made a lot of money with that crash. This cross here, by the way, that was when we entered our short. That's when I announced in premium that we bet on falling prices of ETH. If we take that away, right, make the chart a bit cleaner, we can see the overall trend is bearish. Could we see a short-term relief rally of maybe 10%, potentially even 13% or so relative to BTC? Possible. I don't speculate on this. I always like to have the general market in my favor, right? If currently the trend is bearish, I try to short the tops. And the trend is bullish, I try to buy the dips. Most people only buy the dips, right? A thing that they like will always go up. And so they just look for the buying opportunity when things are dropping. But I try to be more objective, right? I try to be the counterweight. If the current macro is negative, the trend is negative, I don't try to bet against the macro, because the problem is, let's say we were to buy Ethereum now and we would be betting on this potential bounce. If that bounce does not come, then time is running against us. Right? I want to have time on our side, even if we don't time the market perfectly. Right? Let's say we bet now on falling prices and we do see a short-term relief rally. Time is still on our side. We can just wait it out. We can just wait until we subsequently see the sell-off. So if the macro is on our side, we don't have to pick the tops and the bottoms perfectly. Things just play out over time in our favor. But if the macro is not on our side and we buy the dip and we hope for the counter rally and it doesn't come, instead we just go sideways, maybe we bleed a bit further. At what point are we going to sell? That's the big question, right? When do we feel that we got beaten by the macro? That's the problem. Time is not on our side if we bet against the general macro trend. Now, I am especially bearish on Ethereum. I'm more bearish on Ethereum than on most other cryptocurrencies, because Ethereum is not very cheap versus Bitcoin, right? It's going down. But Ethereum, relative to the others' market cap, also does not look that great. So when we look at ETH and the altcoins, there's a lot of trading between them, right? The decentralized exchanges have trading in liquidity pools of Ethereum on the one side and the altcoins on the other side. So really many altcoins are not priced in US dollars, they're actually priced in Ethereum, right? When Ethereum goes down, then automatically the altcoin that's bound to the Ethereum price in the liquidity pool also goes down by 10% without a single trade happening. And so we've got direct correlation between Ethereum and the altcoins. There's more correlation between ETH and alts than between Bitcoin and the alts. So the assets tend to move more in sync. And so looking at how the capital is moving between ETH and the altcoins makes a lot of sense. They tend to just move in a range. So how I measure the altcoins in this instance is by looking at the others market cap. So others is the market cap of all the altcoins that are not in the top 10. And when we look at this chart, this is a very long-term chart, right? It starts in 2017. And since 2018, we tended to be in a range. Sometimes the Ethereum market cap was 2.3 times the altcoin market cap. Sometimes it was slightly smaller than the altcoin market cap. So 90% of the altcoin market cap. And we trade every now and then. We've got relatively constant ranges. We've already seen the sell-off of Ethereum with the recent crash, but we aren't yet at historically low levels. And so I do not think that Ethereum will bottom out anytime soon. Ethereum can even underperform the altcoins that tend to be more risky by another 34%. And that's something that most people don't have on their radar, right? Most people think that if we are in a bear market, that the altcoins are just a levered bet. So let's say Bitcoin goes down by 10%, then maybe Ethereum might go down by 15%, maybe Solana might go down by 20%, and maybe the smaller altcoins might go down by 30 or 40%. That's the conventional thinking, but actually that's not true. What I think is happening is just capital rotation. From Ethereum to the altcoins, from altcoins to Ethereum, from Ethereum to the altcoins. That's what this squiggly line really means. The only reason why the altcoins in price long-term underperform is because of token inflation. But when we look at market caps, we've got a relatively constant range. And so I just trust this long-term trading range. I just think we are currently in negative momentum. And Ethereum has the potential to underperform the rest of the altcoin market by another 34%. If we take out the initial adoption phase and we just look at the exact price since we established that trading range, and we look at its average ratio, right? How did Ethereum relative to the others market cap trade? We might make the argument that Ethereum is already a bit cheap. That maybe we could buy Ethereum for a potential outperformance of 9% or so. So we are clearly trading momentum here. We are not trading valuation. But again, I think that those momentums, those moves are relatively constant. And so I rather think we're going down from here than going up from here. Again, just because based on momentum, not necessarily based on valuation. In terms of valuation, Ethereum might outperform slightly. But again, I'm not betting on this. I'm betting on the general trend. And the general trend, I think, is still rather bearish. And so this, I think, is very, very important, right? It's important to figure out where Ethereum is going because it does lead the altcoin market to a degree, at least in US dollars. And so when I'm not discussing many altcoins, it's because I'm also bearish on Ethereum. And Ethereum especially, not Bitcoin, but Ethereum especially drags down the altcoin market with it because many altcoins are directly coupled with Ethereum. And when Ethereum is bearish, why be bullish on altcoins? I'm more bearish on ETH compared to the altcoins, but I'm also not buying the altcoins because I do think that Ethereum is likely going to come down from here. That's fundamentally how I currently see the market. 30-something Bitcoin, wow, so optimistic. Well, okay, we are early. This is the kind of comments I get all the time, right? That I'm too bearish. And that's actually also the reason why I have this change in my picture. It's actually like a semi-joke. So when we were at 120K, 110K, when we were in October last year, and I was so bearish, and I always said like, sell, sell, sell. I'm betting on falling prices. Sell especially the altcoins. Sell it all, bet on falling prices, hedge yourself. I don't know where it goes, but I only see it's expensive. When I did this, and pretty much every video was bearish, people like, as a joke, called me not Gerhard, but Bearhard. Right? I'm the bear, I'm the perma bear. And then I also bought, you can probably barely see this little bear costume over here. And I wore this. And people just made fun of me. And that's then where I just, embraced it and then changed the picture of the channel as well. Because that's the thing, right? If you trade and you outperform, there are times where you have to be contrarian. The vast majority of people does not outperform. And so if you follow what the vast majority thinks most of the time, you're going to lose. There are, of course, trends where it does make sense to follow when the majority establishes itself. But once there is a saturation point reached, and there aren't that many more marginal buyers, but there are a lot of people in unrealized profit that could become marginal sellers, then it makes sense to sell. And then it makes sense to be contrarian. And it's much harder actually to be contrarian at the cycle top than it is to be contrarian at the cycle bottom. The reason why it's harder is because the sentiment is very different. Here's what happens, right? When we are at the bottom of a bear market, usually all the bulls are already gone, right? Everybody that's permanently bullish is already gone. They've already lost their money. They don't even follow crypto content anymore. And so when we are in a bear market, at the bottom of the bear market, and you post a video that's bullish, where you're saying, I think Bitcoin is now a good buy, you're actually going to get, if you also join the YouTube game or the social media game in general, right? You're actually going to get a lot of supporting comments. People will say, yes, I also think now we are in the bottom. I'm buying Bitcoin as well. It feels very good to make those videos. They might be contrarian in the grand scheme of things because most people are not interested in Bitcoin. But the people that still watch, the very few people, the minority that's still interested in Bitcoin, they will still watch, they will still support. So we are then this small little universe of people that all support each other, and it feels great. When we are out of the bear market and we are in the bull market, more and more new people enter the space. And the vast majority of people will enter at the end, right? Because it's compounding, right? There's a few people, right? We start with 10 people, as an example, 10 people buying Bitcoin. The price rises, then it becomes 15 people, it becomes 20 people, it becomes 50, it becomes 100, it becomes 500. And so the vast majority of people, right, because it's growth, the vast majority of people bought for the high prices. And at some point, though, it will not be 500 people, it will then only grow slower. It will grow from 500 to only 600, to only 650, to only 700. So the growth slows down. And the people that bought early, right, the people that bought when you're still watching when prices were low, that are now starting to take profit, right? They take gradual profit along the way, as we appreciate. They're happy, they're realizing profit. But when you then make a video at the top of the bull market and say, I am pessimistic, hedge yourself, rather be careful, people will attack you. That's why it's so hard for many YouTubers also to make those videos. It's first of all the direct feedback that we get from the comments, but it's also hard because the algorithm does not support that. If I made a bullish video at the top of a bull market and the vast majority of the market is bullish, I will get a lot of praise, I will get a lot of thumbs up, I will get a lot of support by the algorithm, right? There's a longer watch time as well because people want to get their biases confirmed. But if I crush the biases, if I show my data and I say, come on here, this is maybe a bit too high now, let's take some profit, then people don't want to see this. They click away, they give thumbs down, they might even unsubscribe, and I get less exposure by the YouTube algorithm. Still, I make those videos because I know once the bear market is established, all the bulls, they are out, they don't watch anyways anymore, and the few people that have watched the video, that might have taken some profit at least, they will continue watching. And so this is then how a channel like this can grow over the cycles, right? From one cycle to the next, the audience grows because the people simply don't get as much burnt or even make money during a bear market. And so I'm playing the long game, right? I'm playing the game over the cycles. This channel is now roughly 5 years old. So we've already been through the FTX and Terra Luna collapse. Feel free to watch the most viewed video on this channel. That was at the height of the Luna collapse, right? This is when the last bear market started, where many people were actually buying the Luna token, the super highly inflating Luna token, and they got burnt massively. And many people bought the dip and the crash and lost it all. And the people that watched the videos published here, they hopefully got spared from some of the losses, and that's also why a lot of the people watched at that time. But I play the game for the long term, and I'm okay to be contrarian, especially at the top of the bull market when most people aren't, and I make a bit fun of it, and that's why there is the bear heart logo. But so that's why I'm okay making those predictions of potentially even 30K. But I think it already makes sense to buy at the realized price, right? Once we are at the 50 something K, it starts to make sense to make first purchases, then buy more as we go lower, and we might already bottom out at 40K, maybe even above that. And that's my base case, at least. I don't have a crystal ball, but it's my base case. That's if history was to repeat itself to a degree. There's so much more value to come. You've only watched a small, tiny clip video. The entire episode is available over here. Just press here to watch the video.